Chasers! One of the best planning strategies for business owners with a self-managed superannuation fund is the ability to prepay next year's concessional contribution in June. Today's episode is about using this tax deduction, referred to as a contribution reserving strategy. It's a powerful tool that can help you optimise your contributions and tax position. But there are some things to keep in mind. I'm your host, Chris Becks, a financial and business advisor with over 40 years experience and the founder of the multi-award winning CBEX Business Solutions for Good. And because this is a financial planning topic, as an authorised representative of Interprac Financial Limited, I'm obliged to give you this general advice disclaimer before we begin.
The information provided is for educational purposes and is general advice only, as we did not take into account your investment objectives, financial situation or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the relevant product disclosure statement before making any decision relating to a financial product. Chris Becks is a director of CBEX Financial Solutions and an authorised representative of Interprac Financial Planning Proprietary Limited, AFSL 246638.
Okay, now that is done, let's dive into this episode. Joining us today is my colleague, Dale Wilson-Ray. Thanks for being here, Dale.
Thanks for having me, Chris. It's great to be here and chat about maximising tax deductions as we head towards the end of the financial year. So, Chris, what exactly is contribution reserving and why is it getting so much attention lately?
Contribution reserving allows SMSF trustees to hold on to contributions for a strategic period before allocating them to a member's account. So think of it like a temporary holding bay for your money. This can be particularly beneficial with the recent increase in concessional contribution caps to $30,000 from the 1st of July 2024.
Chris, can you explain what an SMSF reserve is for those who might be new to this?
Absolutely. An SMSF reserve is basically any money or assets inside your fund that hasn't been allocated to a specific member's account yet. It's kind of like a separate pool of assets within your SMSF.
Okay, that makes sense. So with contribution reserving, how does this work with the high contribution cap?
Let's say the cap is $27,500 for the year. You could contribute this amount plus the cap for the following year, which is increased to $30,000, and claim the entire amount as a tax deduction. But then strategically reserve and set aside the $30,000 within your SMSF until the next financial year for cap purposes. This lets you maximise your tax benefit now while keeping flexibility for future contributions.
Sounds like a win-win, but are there any challenges to consider?
Sure, contribution reserving requires careful attention with the compliance rules. You need to balance income tax rules with Superannuation Industry Supervision Act, the SIS Act, requirements about allocation timing.
Can you elaborate on that a bit?
Sure thing, Dale. One key point is ensuring contributions are received and treated correctly in your SMSFs and your return, which is based on a cash flow system. Additionally, the SIS Act requires the allocation within 28 days of the month they're received. This time is crucial for determining which financial year the contribution cap counts towards. Ideally, making use of the 28 days to allow sufficient time for the paperwork to be completed is important. Consider making the reserve contributions, let's say 7 days before the 30th of June, to allow time for the funds to clear and appear in the accounts of the SMSF, which then allows 21 days for those contributions to be allocated and properly documented.
So, documentation seems pretty important then.
Absolutely. You need meticulous documentation at every step, from recording contributions to documenting the allocation process for the next year. This underlines the importance of understanding both the administrative and legal frameworks for SMSFs.
Now, Chris, you mentioned the ATO recognises contribution reserving. That's good to know.
It certainly is. They've even included it in their regulatory advice. However, a thorough understanding of the terms and conditions is crucial. Everything needs to be well documented and compliant.
Well, contribution reserving sounds like a powerful tool, but with some complexities.
That's so true. It's a more intricate strategy, but it offers significant opportunities for tax planning and contribution optimisation within your SMSF.
Well, thanks so much for breaking this down for us, Chris. This is valuable information for our listeners who are looking to get the most out of their SMSFs.
My pleasure again, Dale. The ability to prepay next year's concessional contribution in June is arguably one of the best tax planning strategies for business owners with a self-managed superannuation fund. However, the devil is in the detail, and you have to get this absolutely correct within the 28-day time frame to qualify. As with any financial planning or matters relating to tax, to ensure a smooth transition and make informed decisions, always get some advice from an expert before you do anything. It's good insurance against costly financial mistakes. If you would like more information about how a contribution reserving strategy could help you maximise your tax deductions and create additional capital for investing in your SMSF, call our office today on 0355 612643 to discuss your options. Thank you for joining me today, Dale. And thank you, Chasers, for listening. I'm Chris Becks, and I look forward to presenting another episode to you real soon.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram at CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.